Do you actually know what a Forex crosspair is and how to trade it? This might appear a very odd question to ask a Forex trader, yet, in a recent survey we conducted amongst traders, 69% of them, 69% of them, couldn't tell us why a crosspair was different from a major. And many of these have been trading for quite some time. Digging around a bit, it became apparent that the basic problem was that a lot of traders don't really understand the concept of pairs in the first place. The main issue is that relatively few realize that when you take a trade, there are in fact two different transactions taking place. Let us say you are going to go long on pound dollar. What is actually happening is that you are buying pound and selling dollars. It's actually very logical, but few realize that this is actually happening. Why is it important to understand this, you may ask? The reason is, not all pairs are the same. Crosses are different. And why is this, you ask? Well, it all goes back to currency conventions. In order to understand why crosses are different, you first have to know the quoting conventions for foreign currency pairs. In the spot Forex market, each currency pair consists of a base currency, the symbols on the left of the slash, and a quote currency, the symbols on the right of the slash. Traditionally, the base currency has always been the larger of the two, and despite the fact that relative currency values have changed, the conventions have pretty much remained the same, except for the addition of the euro in 2000. The conventional order of currencies starts with the euro. The euro is always the base currency in any pair that it is part of, i.e. it is always on the left-hand side of the slash. Next comes the British pound. The pound is always the base currency when it is paired, except when it is paired with the euro. The full conventional order of priorities for the base currency with respect to major and minor currencies is number 1, the euro, number 2, British pound, number 3, Australian dollar, number 4, New Zealand dollar, number 5, US dollar, number 6, Canadian dollar, number 7, Swiss franc, and lastly, number 8, Japanese yen. From this list, a series of pairs known as majors are created and traded. Firstly, you have euro dollar, then you have pound dollar, Aussie dollar, New Zealand dollar, US dollar, US Swiss, and dollar Japanese yen. All other pairs are crosses. So the majority of traded pairs are in fact crosses of one sort or another. So the question you might ask is, so why just these as majors? Again, here tradition rears its head. Somebody has to make the market, and pretty much 80% of Forex volume ends up with 5 major banks. Now these major banks have traditionally only traded the majors. If you had wanted to trade a crosspair, the trade would have been something called legged. This meant that 2 major pairs would be traded to create the cross. How does that work? For example, let's say you wanted to trade the euro-yen cross. A bank would buy euro-dollar and buy dollar-yen. Now, remember we talked of 2 transactions per trade. Well, with a cross, there are effectively 4. So in the example above, euro-yen, you are buying euro and selling dollar in the first part of the leg. And in the second part of the leg, you are buying dollar and selling yen. The 2 dollar transactions will actually cancel themselves out, leaving you with long euro and short yen, which is effectively long euro-yen. This animation should make it clear. First, you have the 2 pairs, euro-dollar and dollar-yen. To go long on both of them, you are buying euro and selling dollar, and buying dollar and selling yen. The dollar trades, as I said before, cancel each other out, leaving you with the buying of euro and selling of the yen, thus making you long euro yen. How does this impact on your trading? Basically, if you were trading euro yen, you should be spending as much time analyzing euro dollar and dollar yen charts as you do looking at euro yen charts. It is particularly important when regards to scalping or short-term trading. In the next video, we will go through how you utilize this information to better trade